Welcome back to the stock portfolio update videos. Currently, my two stock portfolios sit at a combined value of over $62,800. That's made up of the $37,000 in my stake portfolio and the $25,000 in my Vanguard portfolio. Today I wanted to do a quick video updating around the recent Meta earnings and what's happening to their share price, and I also wanted to go through the recent Tesla earnings and the complete opposite of what's happening to their share price. First, I wanted to go through Meta. In full transparency, this is a stock that I used to own around a year ago, and it's had an amazing run up over the last year. If you've been an investor, you've gone up over 134% just the last year alone. But they recently just released their earnings that got a bit of a mixed bag review. Meta loses $200 billion in value as Zuckerberg's focus earnings call on all the ways company bleeds cash. Meta CEO Mark Zuckerberg unnerved investors on the company's quarterly earnings Wednesday by focusing on its long-term investments in AI and the metaverse. Shares of Meta tumbled as much as 19% in extended trading Wednesday. We've historically seen such volatility in our stock during this phase of our product playbook, he says. Zuckerberg stated Meta's earnings call by talking about the artificial intelligence. Then he moved on to the metaverse, touting his company's headset, glasses, and operating systems. He spent almost the entirety of his opening remarks focused on many ways Meta lose money. Investors weren't too into it. Meta's shares tumbled as much as 90% on trading on Wednesday, wiping out $200 billion in market cap. The drop came despite Meta reporting better than expected profit and revenue for the first quarter. Zuckerberg appeared ready for the sell-off, saying, "I think it's worth calling out that we've historically seen volatility in our stock during this phase of our product playbook, where we've invested in scaling new products but aren't yet monetizing it." Zuckerberg said he cited past efforts like short video service Reels, Stories, and the transition to mobile. Meta generates 98% of its revenue from digital advertising, but to the extent Zuckerberg talks about ads, he is looking to the future and the ways the company can potentially turn its current investment into ad dollars. In discussing Meta's effort to build a leading AI, he says, "There are several ways to build a massive business here, including scaling businesses' messaging, introducing ads or paid content into the AI interactions." He spent time talking about Meta Llama 3, the company's newest large language model, and the recent rollout of Meta AI and the company's answer to OpenAI's ChatGPT. Zuckerberg then moved on to potential opportunities for expansion within the mixed reality headset market, like the headset for work or fitness. Meta opened up access to operating systems that power its Quest headset on Monday, which Zuckerberg said will help the mixed reality ecosystem grow faster. He also talked about Meta's AR glasses, which he called the ideal device for AI assistants because you can let them see what you see and hear what you hear. In the meantime, Meta's Reality Lab unit, which houses the company's hardware and software for development for the nascent metaverse, continues to bleed cash. Reality Labs reported sales of $440 million for the first quarter and a $3.85 billion in losses. The division's cumulative losses since the end of 2020 have topped $45 billion. Zuckerberg has bought himself some time. Meta's stock price has almost tripled the last year, and as of Wednesday's close, was up 40% in just 2024, which reached a record $527 in early April. After a brutal 2022, which the company lost about 2/3 of its value, Zuckerberg appeared to have regained the confidence of Wall Street. The driver for the rally has been the cost-cutting plan that Meta CEO put in place earlier in the year, where he told investors in 2023 would be the year of efficiency. The company slashed headcount and eliminated unnecessary projects in the effort to become a stronger and more nimble organization. Zuckerberg said Wednesday that Meta will continue to operate efficiently, but will shift existing resources to investments in AI, will grow our investment envelope meaningfully. Capital expenditures in 2024 are anticipated to be in the $35 billion to $40 billion range, an increase from the prior forecast of $30 billion to $37 billion, as we continue to accelerate our infrastructure investments to support our artificial intelligence roadmap. Zuckerberg has said he expects to see a multi-year investment cycle before Meta's AI products will scale to profitable services, but noted the company has a strong track record in that department. Meta's finance chief, Susan Li, echoed Zuckerberg's remarks, saying the company needs to develop an advanced model and scale the products before they drive meaningful revenue. While there is a tremendous long-term potential, we're just much earlier on the return curve, she said. Before even the call, investors were trimming their holdings. That's because Meta issued a light revenue forecast for the second quarter, overshadowing the first quarter beat. As the stock plunge intensified, Zuckerberg told investors that if they are willing to come along for the ride, they may well be rewarded. Overall, as someone who used to be an investor into Meta, it's been amazing to see the bounce back that the stock's had recently. Like I said, it's up 134% in the last year alone. In the last 3 years, it's still up 62%, and in the last 3 months, it's up 25%. So if you take a long-term outlook on how the stock has been performing over recent years, it's been quite strong. It did mention the hard times it had in 2022, but once Mark Zuckerberg made that announcement to cut back on costs, and the company had a bit more focus, there was a great run-up in the stock, and it was a good time for investors to be holding. Obviously, it doesn't mean that good times are going to last forever, and in the last day alone, it's down 12% in the pre-market. If you believe in long-term plans of Meta, and if you believe there will be cost-cutting, if they can focus AI and profit the way they have with some of their other business models, where they've run the ads down, they can 100% make some money on their products. Overall, it's still a great company to own, and I think if people are really strong investors and they believe in this company long term, potentially it's a good time for them to buy in. On the other side of things, there was another company that reported its earnings, and that was Tesla. The complete opposite, where Meta's down 12%, Tesla is actually up 12%, and we'll go through why that is. Tesla shares jumped 13% after Musk said company aims to start production of affordable new EV by early 2025. Tesla reported a 9% drop in revenue in the first quarter, the steepest year-over-year decline since 2012. As of Tuesday's close, the company's stock price is down more than 40% this year, as Tesla faces increased competition across the globe. Sales growth across EV is slowing, and Tesla and key rivals have been slashing EV prices on and off for months to try to spur demand. Tesla reported a 9% drop in first quarter revenue on Tuesday, the biggest decline since 2012, and missed analyst estimates as the electric vehicle company weathers the effect of ongoing price cuts. The stock jumped in extended trading hours after CEO Elon Musk told investors that the production of new affordable EVs could begin sooner than expected. Here's what the company reported compared to the Wall Street expectations based on the surveys. The earnings per share of 45 cents adjusted versus the 51 cents expected, and revenue of $21.3 billion versus the $22.15 billion expected. Revenue declined from $23.33 billion a year earlier and $25.17 billion in the fourth quarter. Net income dropped 55% to $1.13 billion, or 34 cents a share, from $2.51 billion, or 73 cents a share a year ago. The drop in sales was even steeper in the company's last decline than 2020, which was due to the disrupted production during the COVID-19 pandemic. Tesla's automotive revenue declined 13% year over year to $17.38 billion in the first 3 months of 2024. Musk said on the call that the company's plan is to start production of new models in early 2025, if not late this year. After previously expecting to begin the second half of 2025, Musk also touted that Tesla's investments in artificial intelligence infrastructure and said the company is in talks with one major automaker to license its driving assistance system. In its shareholder deck, Tesla reiterated the pessimistic outlook for 2024, telling investors the volume growth may be notably lower than the growth rate achieved in 2023. Prior to the 13% jump after hours, Tesla's shares were more down than 40% this year, reaching lowest since January 2023, on concerns about weak deliveries, competition in China, the company's ongoing price cuts. Earlier this month, Tesla reported an 8.5% year-over-year decline in vehicle deliveries for the first quarter. If you're going to be a Tesla investor, you've definitely seen the ups and downs of this investment. Like Meta, in full disclosure, this is a stock that at one point I did own. And when you compare the two earnings calls, Tesla obviously missed, but it's going up a lot today. And Meta obviously didn't do too bad in certain points, but is down massively. As they mentioned, the stock is still down big if you look at from the start of the year till now. And even in the last year, it's only up now 1%. And in the last 3 years, it's still down 34%, where if you had invested pretty much anywhere else, you'd be big into the green. I was actually a previous Tesla holder back in 2021, and I did actually sell out nearly at the perfect time. And again, that was one of the best decisions I've made as an investor, is timing that. And again, I don't believe in timing the market. That's one of the reasons why I exited my positions, and now I hold positions that I believe in a bit more long term. But if you are a Tesla investor, potentially they're probably looking at investing during this dip that's happened, and that's why the stock has probably bounced back so strong it has in the last day. Is though, even though it missed on certain estimates, the stock has been so heavily discounted due to this negative outlook that investors will take any good news in terms of the cars being released even earlier. This is probably one of the long plays. If you're in Tesla, you've probably got a bit of a long-term outlook on it. That was my position back in the day, but I ended up selling after holding it for basically a year. It's not something I'm probably going to be investing in anytime soon. Just not really big into that industry in terms of cars. As interest rates obviously go up, cars are very expensive. People have to go get loans obviously to afford these cars. So higher interest rates obviously seem to be affecting vehicle manufacturers. But I mean, if you believe something else, you're more than happy to go invest in Tesla and kind of look what's going on, and I'll keep tracking it. So hopefully everyone's investment does do well. Because again, I invest in the S&P 500, which obviously has exposure to Tesla. So at the end of the day, I want to see pretty much anything that's in there go up. That'd be good for me. But I'll keep tracking it, whether it's doing shorts on it or doing longer videos next time they do their earnings. But it has been a great day for Tesla investors, up 12%. Having a quick look through my portfolio, I'm up now around 23%. I was at highs of around 28, but obviously the market pulled back, but it has bounced back a little bit. Again, it's only up a tiny bit today, my portfolio, around 0.24%. And I did actually add some recent additions. I didn't add anything new to my portfolio. I just doubled down on two of my strongest holdings and my two actual biggest holdings. So the first one was Microsoft. I bought nearly 2 shares in Microsoft, or pretty much around that, maybe a little bit more. And now that takes my total equity to $4,593 and is by far my biggest individual stock holding. That means my total gains are around 1,320 or 40%, because obviously as I've bought in, it's made my average share price go up. But if you have a look at the last week, the stock is down, and it's even down in the last month, nearly 4%. So as this is probably my favorite individual stock I hold, whenever I speak about its business model, how strong and predictable it is, whenever I could buy it at a discount, I was happy to. So I tried to buy in. Once I saw it dip, I even saw it below the 400s, so I decided to add a bit to my position. My average share price is now 291, so pretty much anything I buy now obviously is just going to lift that mark. In the last year, it's up 46%, so it's been a great year for Microsoft investors, and the last 3 years, it's up 56%. It also pays a little dividend, so obviously any dividends I get, I just reinvest, and I plan on just planning to do that for all my positions. And I don't think I'll sell out of Microsoft anytime soon. I don't see any negative changes happening in the company. Obviously, it seems like they're making all the right moves, so I'll keep documenting how that's going. But yeah, I added a few more shares, and it was, I think, just over $1,000 invested. Looking at my other position I added into was actually VOO. So this tracks the S&P 500, and I have around 11,630. So it's by far my biggest holding, and I'm up around 17%. Obviously, because I've been dollar cost averaging for years, my percentage returns aren't that high, and my average share price is $396. In the last year, the S&P's not done too bad. It's up 23%. But over the last 3 years, it's only around 21, because there was that big sell-off around 2022. I was actually adding in at that point, so I've been trying to bolster up my stock portfolio for the last few years. I even have old videos where my stock portfolio was down over 20%. So now that I'm up in the 20s, it's almost like a 40% swing. So it's been nice for that. But using these times, I hoped to buy in, and I did. I bought in more. And it kind of taught me good things about holding quality companies and strong positions, because it's easy to invest when everything's going up, but those times when my stock portfolio was down thousands of dollars, it can be a bit harder. But I kind of looked at it as hopefully things were at a discount, and that's why I invested in the S&P as well. I plan to try to keep this position around 50% of my stake portfolio. Obviously, it's a little bit less now, but I'll continue to buy in and dollar cost average. It is down nearly 3% in the last month, so that's one of the reasons I did purchase in and try to allocate some extra funds. I believe I bought around 1.5 shares or so, and yeah, it's taken my total shares to over 25 now. In terms of my Vanguard portfolio, that's sitting on around over 25,000 now, and I did purchase some more into VGS, which tracks some of the pretty much over 1,500 shares internationally. This is about as diversified as I can get, and it still tracks all the big players that I have from in my stake portfolio, like Microsoft and Apple. And I added some more into that just to make this portfolio 50-50. And my other position is just VLC, which I haven't added to in a while, so I'm just planning on keeping these 50-50. I have a bit of extra cash sitting in there, so next investment I'll see where I want to put that in, but I think I added around $2,000 into VGS. So I've been slowly building this Vanguard position, and as things were discounted, I decided to add in a bit more money so I could hopefully get a bit more bang for my buck. Looking at the Excel spreadsheet, I've updated it now. So obviously VOO, I need to get that to 50%, and it's currently 48, so I need to buy a bit more VOO. That's because Microsoft is slowly taking up a bigger and bigger chunk. It's nearly at 20% of my portfolio. I remember when Apple was my biggest individual stock holding, but with the downturn in the price of that, again, I could use this as a potential to buy in. I did buy in not that long ago, but not at the moment. I don't think I'll be putting any extra funds in there. And you can see my Australian portfolio is now split nice 50-50. Tracking it, obviously I'll update this at the end of the month, but things have been slowly going up, which is nice. My dividends are getting bigger, getting a bit more compound interest, and then hopefully I can keep tracking these videos. And my goal was before the end of the year to get this over 80,000. Originally the goal was 100,000, but I've had a lot of life expenses and other things to pay for, so hopefully I'll hit 100,000 in 2025. That's the goal, but I'll keep doing these videos and tracking how my portfolio is going. This was just a bit of an update. Obviously, I just wanted to go through what happened at Meta, why the stock was down so big, and I also wanted to go through what's happened at Tesla and why the stock was up so much. Those were just my thoughts on what's happened and a bit of news on them. If you had any thoughts, feel free to leave them, and that's all for now. Cheers.